Test. Good morning. Happy Halloween, everybody out there. Today is Tuesday, October the 31st, 2023. We're going to be looking at some assets this morning. There's not a lot going on, simply because tomorrow we got a lot of data coming out, and then Friday's non-farm payrolls. So there probably won't be a whole lot to do today as far as just sitting on our hands. Bitcoin is still accumulating in a range under monthly support, which is acting as a resistance currently. This is typically a bullish signal, but like I don't want to see it go on for too many days. You know what I mean? Like 5 to 6 to 8 days, maybe. But once you get in the realm of when your flag is as big as your pole, then the bad things tend to happen. So we'll see if any more buyers step up to the plate up here at these prices. I would assume that a lot of people were taking profits because like that was our target for the year to be hit, and it got hit. So I don't know what's going to happen after this, but a measured move on the breakout would put us up around 46 to 11 if we were to get another breakout of the same size and veracity, if you will. But as of right now, it's trading inside of a range 33,906 and 35,060. As far as our other assets here, we got the top end of the daily range today at 44.50 on the NDX. Let's just go ahead and look at the NASDAQ Futures. I haven't messed with them. It's the wrong thing. Let me pull this up. And let's go get our measured move for the day. It was 117, but they've dropped it down to 112. So we'll use the 117 just to be safe. Yesterday's close was 14,412. And we'll add the 117 to it. That puts us at 15. What was it? 15,529. 14,529. Sorry. 14,529. That would be the top edge of today's expected range. And then we'll put in, obviously, the bottom edge of the expected range as well. I keep pulling up all the wrong things. All right, so here we go. With this one, just give me a second. $14,295. And there's that. That's for your NQ1s, ES futures. I wouldn't expect more than a couple handles, to be honest with you. Like maybe 25, 26. Let's go see. Yeah, 26 handles for today. All right, so 26 handles. That's going to be from yesterday's close. $41.85 plus 26, 42.11. Bear with me. I should have had all this ready to go. $41.59. All right, so there we go. There's our bottom edge. So that's typically the range we would be looking to trade today. As you can see, pre-market, during after hours, I should say, you've already made a move, a push low. You didn't hit the expected move to the downside, but what you did hit was demand. And you've bounced pretty good off of that. You could see over here, there is nothing going on. I mean, you're up 0.19 on the futures. You're down 0.02 on that. So 0.111 or 0.11 there. And the same goes for the currencies. The one thing that has absolutely rock and rolled was the JPY, and that's based on what the BOJ said last night. As you can see right there, the Japanese yen is down 1.34%. That is a massive move to the downside. There you go. Getting really, really close to taking out the lows that was put, or the highs or the lows, depending on if you're looking at USD JPY or if you're just looking at the yen itself. USD JPY. So yeah, like I said, ever since we've been over here, I've been screaming not to short this thing because it's just not probably going to go lower. I mean, we have such a massive spread between the interest rate that people are just going to set in this long for the carry trade. It's a guaranteed 5%. So I mean, as long as it doesn't go lower, right? But that brings investors in. They'll get long this asset. And according to what they said yesterday during the speech, that they're going to set their floor at like 1%. That's not really good. That's not really good. So we don't know what's going to happen really with this, other than more than likely we're going to see 155, 160 potentially before they intervene, or before the Fed has to intervene based on our raising yields. All right. But our yields are not rising. They're trading sideways in a flag formation. Here, as your 30-year, there's your 20-year. 20-year did put in a massive spike a couple days ago, but has since pulled back. 10-year, same scenario. 5-year, same scenario. 2-year, same scenario. Now we can look at the actual 10-year, 3-month bear ascension here. You can see this is moving towards the 0%. That is basically when you'll be uninverted. And I believe this is the 2-year, 10-year. Yeah. All right. So this is called a bear steepener. This is like, typically this happens right before the uninversion happens. Then you get your recession later, right? We can look back in time on this. I mean, you don't have to take my word for it. I don't know how much time will get out of these, but you can see right here, every time you had your boom, right? This was your bearish steepener. Then when you got in here, this is when you had your recession. Inverted yield curve, bearish steepener, inversion, recession, or uninversion, recession. There goes your inversion, your bearish steepener, and then months later, recession, and I can go on and on. And it goes the same for the 3 year or the 3 month, 10 year. 10 year, 3 month. Only this data goes back way further. And there's 2 times here where you didn't actually invert and you still got a recession just because you got down to the 0%. But that's why they call it a bearish steepener. It's when it's pushing up. And we are currently pushing up back to that 0% level, which means the yield curves or the yields were no longer being inverted. Your longer term should be higher than this should be higher than the 20 year, and the 20 year, 10 years should be higher than the 5 year. Same go for all the way down, right? The near terms. So what typically causes it to be bearish is because that's when the Fed will have to start cutting rates. And then when the Fed starts cutting rates, people are going to want to lock in these high rates. All right. So then what we should see is an explosion in bonds. Now, the problem that we have right now currently is that we're not sure that we're not going to have some kind of unrolling of long-term people who are sitting in those that have to cut their positions, which could cause much lower prices on the bonds. So basically, we're watching the bonds to see if they find a floor somewhere so we can get long. Because when people go to lock in those higher yields, your 20 years, your 30 years, they're going to lock those in. They're going to lock in near-term high rate or the high yields on the near-term bonds. But the TLT is pretty good one to look at if you want to get long, right? You could buy a long dated call or just go buy outright shares of this ETF. And as you can see, I mean, it literally crumbled. These are monthly candles. It's monthly candles. The damage occurred in 2022 and then 2023. And as you can see, the damage that happened in 2022 is much worse than the unwind of '09. So typically when you get your recessions or whatnot, your rate cuts, this is '08. This is the bear market of '08. TLT got a nice explosion to the upside. And then once TARP stepped in, and once they got the interest rates down really, really low, then people started to leave this and go back into risk. And you can see that if you just compare the S&P 500 to it. Which I should not have did that. Let's get rid of it and do it the right way. All right, boom. All right, so we'll leave the yearly up. All right, here's your '09. '07 is when the crash started to happen. It's really associated from '07 to '09. There's your bottom right there. So you can see in '07 it started to go down. Look at TLT in '07. It's going up, up. That's people jumping out of risk assets into those bonds to lock in those higher rates because they know the Fed's going to drop the rates. So when the Fed drops the rates, that's going to cause, for people to jump in there real quick and lock in those high rates, baby. So we are looking to position ourselves long in bonds. You could do that by selling puts, way out of the money puts, way out of the money, way long term. If you're not afraid to get put the bond. So basically, what does that mean? You would do something like this. You'd pull up the 2-year or the TLT. Oh my jeez. All right. Damn it, there's no other way to do this. No options are available for this asset. You are out your mind, sucker. Now let's see if it'll pull them up. There we go. I'm talking long term, right? Jan 1, 2024. That's not that long term, but yeah, obviously I'm having some internet issues here, or the platform is having issues because I don't see no quotes moving. There we go. All right, and then you could just sell way out of the money puts because there's plenty of money on those. You could sell a 69 put on the TLT. Let's clear that. Where is it? There it is. We want to sell it. And then the whole idea is to get put, right? Is to get put these shares. Then you'll own 100 shares at 69 bucks if it ever gets down there. So we review that, we'll send it off, and then we'll get filled on that. And then we'll have that position there. All the positions that I had on Friday that were making money, obviously I had to close them all out because every single one of them went completely against me on Monday. All right, so let's go over here and I'll show you those positions real quick. Because the video that I did on Saturday basically went over everything that I am watching. I was short Netflix via put options. And down here is where we closed out the day on Friday. This is where we closed out the day yesterday. So, I mean, technically one could still look for short entries up here, but I took the position off before it went against me, right? But the thing is the unrealized P&L dropped, obviously, because all three of those things were above 70 bucks into the profits. So that's like 200 and something dollars into profits. And I woke up when the market, not when I woke up, when the market opened yesterday on Monday, the Verizon trade was in the red. There was nothing I could do because it literally opened up way up here and just took off to the moon, like in the first 5 minutes of the day, right here. So there was nothing I could do. It just shot up all the way up to where I entered the short position and further because I got short at this white line. So by the time I could even get the trade off, it was too late. It was in the red by like 20 bucks. It's typically not something I ever let happen. I will close the trade before I let it go against me because I can always reposition on the asset higher if need be, or if I still share the same bias. We did close above the trend line. Trend lines are very subjective. Like I said, if you take log, just turn the log chart on, you can see you haven't even hit the trend line yet. So, I mean, this is kind of a breakout. And then we were also, our main asset that we were watching for potential shorts was Amazon. And Amazon broke out yesterday. Like, it's a legit breakout. Right? We were watching 128.56 for potential entries. That's where it closed on Friday. This is what it did yesterday. It gapped up above resistance. No, you do not short that. You short it on the way back through. If it comes back through it and then acts as if though it can't get back above it, then you take a chance on a short position. When you gap up above resistance, you never, ever, ever short that. Look what a day that thing had. It opened at 129.68, closed the day out at 132.71. You do not want to short that. Never. Because Amazon, even though that's not a very huge move, $4 move, in put land, that's over a $400 loss. And that's just depending on what delta you chose and the gamma associated with that delta, right? Because that could have been an $8 loss or a $10 loss on the options. So you always got to pay attention to that. And Amazon's options are very quick moving. They move very fast. All right. So with that being said, yeah, I'm not looking for shorts Amazon anymore, especially if we get above monthly support. That's the no-go zone. If it rejects here and starts to roll back over, then maybe, but you're still shorting something that is no longer in the bearish zone. Like if we're going to short something, we want it to look like this right there. Does this look like this? No, it doesn't. It doesn't even look close to it. Right? We got above it and then we fell back under it. Got above it but lost momentum and got back under it. That's where we're looking for shorts. This thing just shot straight up. That is not bearish. That is bullish. And like I said, the NASDAQ is green on the day. We can just pull up the grid. I got the NASDAQ pulled up real quick. All right, so here's the open. This is the NQs. I'll show you where you are. There's your expected move. There's your expected move. So you're like in the middle of the expected move. It's not moving. Why are you not moving? Yeah, something's wrong with this platform because over on Thinkorswim, we're trading at 1427. There is no refresh button on this. I'll just exit it and reopen it. That's why. I had over 100 megabytes per second of download speed before I got on here and 20 upload speed. I'm pretty sure that's fast enough to do a live stream. But apparently not. All right, so we'll drop that down and that should green us up a little bit. Give it a second here. Give it a second. How's everybody doing on this fantastic day? Let me pull tastytrade back up. And I'm not on Wi-Fi either, which is weird. Not on Wi-Fi. I got it plugged right into the modem. But I had to completely reinstall Windows and everything, so the computer is a little bit slower than it was. Like pulling up programs and stuff like that. So this is what it was stuck on, and it had already made this move there. So, like I said, we're kind of in the middle of the range here. We got a VWAP coming up, so we could probably try to get long. I don't know what this yellow line is, but 14,391s. It's volatile. What? I don't have enough to do two. Which is probably a good thing, seeing how it's very volatile. All right, let's see if we can get a fill down there. On the NQs, the ticks are positive. So we want to look for longs. Whenever I say ticks are positive, I'm just talking about the Analyze tab. All right, so we got fill. I'm talking Market Watch. Sorry. What is this garbage? Where is... Oh, it's on visualize. Not the heat map. We want index watch and the SP 100s. This is your tick chart, or what I refer to as a tick chart. It just shows you the advancing stocks and the declining stocks. Advancing and declining. And if you got more advancing than declining stocks, you typically want to look for bullish positions. But it doesn't always work out, as you can see here. And something else is going on because I'm not down that much on this trade. So one of my other positions is getting killed. But we will sell to close this if it wants to continue to drop. Let's go look what other positions getting killed. So the Schwab is getting killed. It's down 20 bucks, and GDX is getting killed. Absolutely getting wrecked. TLT's just still working. BA's up 7 bucks. Let's go look at GDX, see what the hell is going on with that. Yeah, that gap down, that's gold isn't doing so hot now. On a day that the dollar is... Oh, the DXY just exploded to the upside. Did we have news? Nothing major. I don't see anything here that should have the dollar this bullish. It was bearish the last time I looked at it. So the last hour, boom, big move to the upside there. All right, whatever. We still never did get our short entry off on Euro USD because it didn't tag the top edge of this area. I wanted it to short it up in here, right? Take out this swing high, then we'll look to get short, as it is a bear flag. A clear and obvious bear flag. You don't get much clearer than that. But I did think that, I mean, we could have took a short at daily res. I was watching daily res, but I didn't get the short off. And I was awake when that happened, so that's on me. Damn it. But the ticks are still bullish, so I'm not exactly sure what's going on. But you were in the middle of the range. It's never a good idea to take a trade in the middle of the range. If GDX continues to go down, or if gold continues to get wrecked, remember, we close the positions out if we hit a 1% loss on the account per trade. Per trade. Yeah, so gold is a doji. It's not even. Something else is going on with GDX. Maybe it holds support here. I don't know why it would. I mean, that was your expansion candle. Got long yesterday in here, looking for a retest of a demand and then another push to the upside because gold is bullish. But GDX is testing yearly opening range. So I don't guess the GDS stock has to be bullish just because gold is. But this is the area where we no longer want to look for longs. As long as it stays above 27.74, I think it could still be good on longs. NVIDIA long. No, you're breaking down from an obvious head and shoulders pattern I've already told you guys this. We were looking for a retest of 430.77. I'm going to promise you one thing, Brian. If you continue to go against me, you're going to lose money, man. Because I make money. I promise you. I mean, this still could be a bear trap, and you could take a long at the bottom end of the day. Like right now, I would get long for a quick day trade scout back to the upside, because this could be a bear trap, and that would be it. After that, if you open tomorrow down here, you're breaking down out of this obvious head and shoulders formation. There is your neckline. Like, you are breaking down. This is a gap down from a close up. Yesterday you tested it, closed up. Today you gapped down and went down. That's not something you want to long. You're going completely and totally against the grain. And NVIDIA options move fast. Fast. So let's go look at them. I'm going to kick myself in the tail if I take this trade and end up getting my ass kicked on it. Tons of implied volatility on it. So I would take this one just because it's got less implied volatility on it. I mean, to get long, you're gonna spend $1,800 to get long. You're already down $40, $50, $60. You know what I'm saying? Like you're already stopped out if you would have done it. Now maybe a spread, $5 wide spread, that'll slow it down. But you're skewed over here. Your max loss would be 130 and your max profit 115. Which, oh, it's not a $5 wide spread. That's why it's $2.50 wide. There you go. There's your $5 wide spread. It's still skewed though. Your max loss is still bigger than your max profit. I don't like taking spreads like that. I don't like taking spreads unless they're $1.50 or cheaper, because that means it's easier to manage the risk. You just go out there and buy an outright call, it's going to hurt you quickly, very quickly, if it doesn't turn around. And there's nothing here to turn it around. You are breaking down. This is one of the most perfect head and shoulders patterns that I've ever seen. That's why I was wanting to see a pullback first, up to like 430.77, then we could short it. This isn't the right thing. I'm looking for the ABCD garbage. Yeah, so like head or left shoulder, boom. We'll put the head there. Bring it down here. Right shoulder. I mean, it's pretty good. Right? It's wrong, but I don't know why that line's all screwed up like that. Just use the white line as the... Turn the magnet off. We use the white line as the... Like, this is a breakdown of a head and shoulders formation. You don't want to get long that. Even though, I mean, we're not pattern traders. When there's an obvious pattern situated there, I mean, you can call this a 3-drive topping formation. It's a distribution pattern. It's a selling. It's people are exiting the position. Where is NVIDIA? Nvidia is down over 4%, over 4.5%. Let's see here. Yeah, you're down almost 4.5%. So that's a risky trade, bro. Risky trade. And like I said, you'd have to bottom ticket and get out quick just to make a quick buck. That's putting way too much risk on the table because you're risking the entirety of your put. If it costs $1,800, that's what you're risking. For a day trade, that's pretty risky. It's too risky for account size that I have. Because I could lose $200-$300 on it in 5 minutes. Tesla's pushed down yesterday. Today you're gapped down a little bit, but Tesla's trading as an inside day currently. Let's go look at what NASDAQ is doing again. NASDAQ pushing lower. NASDAQ will be along if we get down here. We just did hit negative ticks on the NASDAQ. Well, technically, we would be wanting to look to short it, but yeah, I don't know. I think I would much rather go long. I think it would be more prudent to look for longs because if it's going to sell off tomorrow, then it would probably sell off once we get the news. Might see a bullish push and then it sells off, but nobody knows what's going to happen. You got the news and the reaction to the news. So S&P 500 is bearish. Went from being bullish to bearish. Or that's the NASDAQ, sorry. But S&Ps did the same thing. But still, it's a very small range day. Yesterday's move is the reason why I figured we would get some upside continuation. At least up to 42.21. So that's what I'm looking for to play out. I don't know if it will. All these CPIs, this is May CPI. We're trading. May CPI came out at 4%. Then June, it jumped. This is June CPI. It jumped from 4 or down to 3. And then July, it jumped up from 3 to 3.2. And then the market had a nice move to the upside, then traded back down. And then this is where we had August CPI, and it went from 3.2 to 3.7 based on the move on oil. And it's basically been trading in between the CPI numbers. Right there was your October CPI. Down here's May. So we got November CPI coming up next month. Somewhere in here. In this area right in here. But as long as oil goes down, and also, if you notice today, Euro CPI came in lower. There's core year over year. Look at this one. CPI year over year. Boom. That's a big drop. From 4.3 last month to 2.9% this month. And then from 0.3 down to 0.1, that's good. GDP still negative on the quarterly. Year over year, it's positive, but still lower than it was. So that's what's helping their inflation. Our GDP came in hot, which is not helping our inflation. But our GDP is based on the government spending, not so much retail. I mean, retail sales are good, but they're not great. But yeah, Aussie dollar moving back down. Aussie yen would have been a long. Anything versus the yen. Long, because they haven't said anything like they're gonna do any kind of hiking, which would need to be done in order. So this short position that I got on up here is going to get stopped out. This is going to make fresh highs. It just made fresh yearly highs. It's going to take out 2022's highs as well. It's what it looks like. Bitcoin's probably coming off a little bit based on what risk is doing with the dollar strengthening up. But all in all, still a pretty slow day. 0.3% on USD CAD. Trading at daily res. Would I short that? No. It's too bullish. And I have a bullish bias on the dollar. But I thought the flag would kick in down in here. Look to buy it down in this area for the next leg up. But it did already come in and test it, so this could just be a lower high. Getting ready to go up. We'll see. Oil's still just chopping. Chop. This is 2 week support. It did kind of bounce off of it. I thought this morning, I thought I seen a wick down all the way to it, but I guess not. Oh, that's what it was. There's a wick on it, but it's not today's. It's from the previous day. Yesterday. But with this is a momentum candle, a breakdown candle. After making a lower high. It looks like oil wants to pull back to the yearly opening range. We'll keep our eyes peeled on that. Looks like GDX is bouncing. No, Schwab is. Still haven't got filled on that TLT. What the hell? Let me go look at TLT again. That's why. It's because it's moving up. I tried to get filled on the open. It's moved up since. So it literally have to come back to the open to fill me. But still, this doesn't look very bullish to me. It still looks like a bearish flag. Something like that, right? And then you got another leg down and you're like flagging out again. So I'd put that right there. And maybe wait till you break out of that and then start selling those really low puts. Because even if it continues to go higher, you'll still make money on the premium that you sold, right? If it continues to move higher, you'll make money on the sold put. But you definitely want to be in a position long. You could sell a put and then buy a call. But that would put you double long. So if it does break down, you would lose money on the sold put or the short put and the long call. So you lose double the money. Double the money, man. But I do believe that, as long as we don't have a major credit crisis like we did in 2008, then this probably will end up bouncing. Let's see what happens if we get down here to the daily expected. But it changed. Remember, it was 117 this morning. The last time I looked at it was 113. So that would put it up a bit. Not that much, though. Good morning, good morning, good morning, good afternoon, good morning, good morning, good morning. Thoughts on XRP, please. All right. XRP. The Ripple universe. Yeah, it moved with Bitcoin. Not nearly as much as Bitcoin. Bitcoin moved 30 something percent. Well, this did too, to be fair. To the high, it moved 35%. But it doesn't look like it's doing it as good. But Ripple's just now making a move, so I don't know. That level has got to be something else other than a daily. Yeah, there it is. It's a weekly. It's one weekly up candle in this entire down move here. So it's only natural that that area would act as resistance. I wouldn't be a buyer here. I mean, you can go back in history and look that Ripple is typically struggled with 50 cents unless it's been in like massive bull markets. Like, you can just see how it struggled. Struggled there, struggled there. Then you got your big massive bull market. Then it came in, retested it there, bounced, lost it there. And this was the court ruling, and back under it she goes. So this is an area that Ripple struggles with. So I definitely would not be a buyer of it up there. Be a buyer of it down here at support. Always look to buy support if you want to get long an asset. Don't wait for the asset to go and then decide to buy it. You got to buy it when it's down on the lows. When it looks like it's going to go lower, that's when you buy it. As long as support is holding, as long as you can find a legitimate support that holds on a closing basis. So you had 1, 2, 3 attempts to buy support. 46 cents. Then you'd be up nicely. But if you buy it now, you have a chance of it ripping right back down in your face. Like, say, the SEC doesn't approve an ETF for Bitcoin. All that move up on Bitcoin will come right back off. Now, I know that was based on XRP's court case. Bitcoin's doing something else. It's almost like Bitcoin's acting like a flight to safety, which is very weird because Bitcoin is the most risky asset on the planet of Earth. I mean, every single time it has a bull market, it comes off 70 something percent, 85%, 91%. Like, insane. But yeah, I wouldn't buy XRP just yet. Maybe if it gets back down there around support, I'd be a buyer of it. Or you could watch this week's open and see if it holds support there. Let me go back to it real quick. Like this week's open, you could watch it right there and just see if it holds. You don't want to see a weekly close under it. And if it does, I mean, you're just buying 4 cents lower. One good thing about cheap assets is you can buy a lot of it. Right? I don't know anything about XRP, what it's supposed to be used for or anything. The one thing that I do know about it is that it didn't even make all-time highs when Bitcoin and everything else was making all-time highs back in 2021. Right? It didn't even reach its ultimate all-time highs that was made back in 2017. So what does that tell me? right there, it tells me inherently this is weaker than Bitcoin, than Ethereum, than every other crypto asset that did not make fresh all-time highs. That this asset is weaker. We typically don't look to invest in weaker assets. We want to invest in the assets that show strength during bull markets. Now, to be fair to Ripple, from 17 cents up to $1.96, that ain't bad. But it still is what it is. It still did not take out its all-time high of $3.32. When all that stimmy money was in there, when the Fed was down at 0 interest rates and giving people free money, you still did not get to your all-time highs. Link did it too. Link is another one of those inherently weak. No, not Link. What was it? It's not Link. Link did make fresh all-time highs. It was... What were like the first three? Ripple, Bitcoin, Ethereum, and then there was like one other one. I can't think of it right off the top of my head, but it didn't make fresh all-time highs either. Let's see if I can find it. And Bitget, I just don't remember its name. Not Link, though. Link was going absolutely crazy. Oh my God, what is it? Litecoin. That's what it was. Litecoin. Inherently weak. All-time high, 2017. All free stimmy money, bullish, everything makes new all-time highs, but not Litecoin and not Ripple. Now, Ripple quit trading on exchange, on Coinbase's exchange. I don't remember when. So that might have had a huge effect on XRP. Well, it obviously had a huge effect on XRP. I just don't remember when it quit trading. But typically, you don't want to invest in something that couldn't get bullish during 2020 all the way to 2022. Because, I mean, even like Tesla, like all your stocks did it too, right? Most of them made fresh all-time highs. All right, doing good today, Heath. Yeah, everything is doing all right. Still holding these shorts, XPX and pound dollar. I'm still holding the pound dollar short. I'm not short SPX. You might be, but I'm not. But yeah, I'm still holding pound dollar shorts. I'm still holding Aussie dollar shorts because I'm long the dollar. I have a long dollar bias. And I have a USD CHF long on as well. But it got really, really close on this pullback to taking me out. But it didn't. Still in it. But we'll see if the dollar can get anything going. It's doing pretty good, which means, I don't know. The ES has still got positive ticks. Well, no, it doesn't. Never mind. It has dropped to negative ticks. You got 52 declining, 53 declining, 48 advancing. That's not good. So what started out as a bullish market is now bearish. Or at least half bearish. Probably has something to do with tech. Let's go look at tech. Let's see which one of those are. Oh, yeah, that's why the S&P is not bullish. That's why right there. Apple's got earnings coming out on Thursday. That's another big driver of the marketplace. So Wednesday, you've got Fed, which, the the market's pricing in it. They're not going to do anything. That they're just going to pause. So yeah, nothing new there. Then this day right here, you got Apple earnings. Apple earnings will drive the S&P 500. Apple is the biggest one, the biggest market cap in the S&P 500, or one of the top three, anyways. That will cause S&P 500 damage if it does sell off like Google did. Yeah, literally the only one that's bullish is Tesla. And if it drops back down to 197.24, it will not be bullish. Netflix just coming off a little bit. Nvidia, yeah, I mean, boom, there you go. So you could have made a successful day trade from that low to there. But that is very risky. Yeah, I mean, if you're just gonna do your own thing, I don't even know why you ask me. There's no way in hell I'd have taken that trade. It's too much risk. Too much risk. You could free fall from here. You could free fall all the way down to 346 or lower. You got gap fillage in the village down there at 318. So you're not even in the gap yet. So just imagine that. This thing could go down just as fast as it went up. And that is a topping formation if I have ever seen one. Small little baby candles on the way up. Small little baby candles on the way up. Big, huge gap up. Then look at how volatile this asset became. Look at the size of some of them candles. Look at this candle right here. Like, you're under support. There's no support where you're currently at. You just basically took a blind long based off of zero technical levels. You're under this. I mean, you're under the 21. Yeah, I have no clue why you would even want to look for that long. But like I said, if you can afford to do it, do it. It's too steep for that small portfolio. This one, it only had $5,000 in it. So by taking an $1,800 position, that would literally be mutilating the account. It would move too quickly. So let's get rid of the TLT since it's not going to fill, since it's moving up. But that's a way that you can trade the TLT. Well, I should have left it on. It was about to get filled. But I don't necessarily want to fill it when it's still in this formation right here. Because if it breaks down through there, then you're probably going to see it continue to go. But if everybody starts, locking in those high rates, then this thing is going to shoot back up. And we want to be long for that. And it's cheap enough to just buy the calls, and they don't move that fast. What was that? Like $100? What was it at? Damn it. I should have adjusted that from 117 up to, what was it, 112? That's still only $5. So from 299, 305. Yeah, it still didn't tag the lower edge of the expected, but it got bought up pretty good down there. We'll watch it. Now I got buying power. We'll see if it wants to come back. I mean, on the long term, this thing is probably going to be a short again if you look at the longer term charts. But you got Amazon that's bullish today, starting to get bullish. Google starting to pull back. See, Google was all the way down there. Now it's pulling back. And I expect Google will pull back because it had good earnings. I don't know why it sold off so bad. That's a big move down. Over $10 to the downside on good earnings. That's typically not something we see. Typically not something we see happen. So it could pull back. When I say pull back, I'm talking about to the upside. You did take out, this was a huge low to take out. August low was a big low for a lot of these things. That was Tesla's. So you got lower highs, lower lows. Nvidia, August lows. You took them out. So you got lower high, lower lows. But it is bouncing. Yeah, Amazon's about to test monthly supply. Let's go build a spread on Amazon. If we can. Because they've already had earnings, so IV should be low. Looks like the 24 days is going to be the lowest vol. That's not far enough out. We would need a move like today. That's a $4 wide spread, but it's skewed to the right side. 239, 261. I would take that trade if it stops here, but if it goes above that, then no, I'm not. It's got to stop right there. Freaking NASDAQ moved from 322 up to 394. 70 handles, dude. 70 handles. 321 is that bullish candle's low. To 405. That would have been a freaking $200 trade. And I missed it because I had the damn line too far away. I would have risked 5 handles on that. It'll probably be an inside day though. Like it might take out the daily high, but I expect it to drop back in the range. I don't expect a whole lot of stuff to happen today. And I'm sorry, I can't hear if things are binging or not. If they are, I apologize. If you guys are hearing Discord bings. All right, see, there was a tag of monthly supply. We could put on a spread. A spread it doesn't move fast. So we could put it on. Let's see if we get filled. We should because it was still at the midpoint. There we go. We're filled on that. So what we'll do is we'll just watch it. If it gets up to like, we start losing 20 or 30 bucks, we'll close the trade out. It'll be a day trade, but it's okay because I don't have any day trades. Futures are better because you can trade futures 1,000,000 times in one day. Look at this. Here's how many trades I've taken today already. See that? That's in, out, in, out, in, out, right? 15 of them. But I can only do that 3 times a week in stocks. That is the stupidest rule I've ever seen in my life. And it's supposed to be to protect the retail trader. When a retail trader can go out and just get a futures or a forex account and trade as much as they want, they don't care about that. You can blow those accounts, but we don't like it when you blow stock accounts. What kind of horse garbage is that? Anyways, good job. Hopefully you're short high on the SPX. Thoughts on Dow theory, bear market confirmed. I don't know what Dow theory is, so I can't help you with that. Apologies. I stick to my strategy and my strategy alone. Like I don't search out like new stuff like Elliott Wave and anything like that, because the way that I approach life, if it isn't broke, don't fix it. I mean, this account proves profitability, right? P&L year to date, $1,200 on a $5,000 account. That means I'm up 22% on the year. Not bad. This account got opened on July the 2nd. Sorry, not January, July. So, I mean, that proves profitability right there. If it ain't broke, don't fix it, right? Maybe I'll search out Dow theory and Wyckoff distributions and all the other nonsense horse malarkey out there. What, like Elliott waves and bat patterns and heart-shaped formations and all that. This stuff right here, I don't even know what that stuff's called. Like, no. Cipher patterns and stuff, nah. Nope. I keep things simple. I trade within the ranges that the market provides because it's telling you, you know what I mean? Basically, it's telling you everything you need to know. Like, on this month, we had a nice move to the upside. We closed not quite a doji, but still not as nearly up at the highs as it should have. But then what happened next month? You took out the highs of the previous month and puked. You even almost closed on the lows of this monthly candle. So any retest of this area right here is a good place to look for short entries. Will it work every time? No. That's why it's up to me to manage my losers. As long as my losers are smaller than my winners over time, I make money. I don't really like this because it looks like a complete and total reversal. But a retest of the monthly midpoint, retest of supply, yeah, I'll take it just to see if it works out. If it don't, then, I'll wait for a day to close above. Maybe it closes 2 days. Maybe it closes a weekly and then another weekly and then falls back under it. Well, then I'll look to take it again later on down the road. And that time I'll probably be right. This has a lot of bullish momentum in it. I mean, it closed down here, had good earnings, and since earnings, it hasn't done anything but closed higher bullish candles. That's a trend. It's a near-term trend, but it is still a trend. You typically don't want to short something that has that much momentum. But with today's open, the momentum is dying out. However, this will only be finished calculating once the daily closes. If the daily closes bearish, then it'll have a down tick on it. If the daily closes way up here, then this thing will be sticking straight up almost. But we'll see. I mean, it's definitely a level that I look to take trades against, but against most of the rules. Yeah, you're above all moving averages too, so that typically would take it out of the short side box. This is the breakout of a downtrend. This high right here, if you take that high out, you're going to have a wedging formation. Like if you take that high out and then reverse like you did there, monthly supply. Look what happened the last time you tested monthly supply. You could have held that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Would have been a nice trade. But now you got all this bullish momentum based off earnings. Amazon's a good company. I shop from Amazon quite often. Quite often. In fact, I got headlights on the way. They should be getting here tomorrow for my truck. Bought some new sexy lights so I can high beam people. Just kidding. I can't see stuff. I can't see nothing at night with my lights. So it was time. But I don't know what Dow theory is. I apologize. Already in Bitcoin short, which may not be smart, but it's textbook Wyckoff distribution schematic 1 on the daily. Also rising resistance on the weekly is around 36K. Does not look bullish though. Okay, Mr. Scotland Investor 777. I don't know if you're new to my channel or not, but I don't know what any of that means. That is not a Wyckoff distribution formation. It is a Wyckoff accumulation formation. All right, and I will show it to you real quick. I'm not laughing at you. I'm laughing with you, my friend. Because you'd be surprised at what people teach out there. That is absolute garbage. All right, so you're on highs, right? You're trading in a range, an obvious range. We'll just mark this as the top end of the range, and we'll mark this as the bottom end of the range. This is a distribution formation up here, right? Then it rolled over, blah, blah, blah. One could even argue that this was a distribution formation because you were making higher highs but not getting any kind of momentum. But then you dropped right back down to the bottom end of the range. This is a big accumulation zone. You can see it right there. This would be your springboard formation right there. So if anything has to do with Wyckoff on this chart, it would be this. And it would be accumulation, not distribution. Now, in my opinion, you could be right. This thing could dump tomorrow and end up being at 20 grand, right? Bitcoin is very crazy. But this is not a distribution formation. Now, will people take profits up here? You're damn right they will. It was my profit target. I got long at the yellow line at the beginning of the year, and this was my ultimate bullish target. And it was simple. The reason why is here you built in monthly support. That monthly support was checked here and here, and it held. Both times price traded back away from support. Then on this candle right here, you broke down through support, and you never, on this candle, came back to retest that support. So when I got long down here, my whole intention was for price to trade back up to here, fill the CME gap, test this untested support, and then probably chop back around sideways and come down there and grab that gap that's setting down there. And then shoot to the moon, Alice, because by then the halving will be here. By then we'll know if we're going to get a Bitcoin ETF and all that other jazz. But if you're not familiar with the gap, it's this one down here. This gap got filled, so I took it off the chart. But I'll show it to you. It's right there. There's your gap. And guess what? That is called gap fillage in the village. You filled the gap. That's also that monthly support zone. That's how you know that's support, because it broke down so freaking hard. It gapped down through it. And then it gapped down again here, but obviously this filled all that. So the next gap is down here. This is the last gap on this chart. Every other gap has been filled except for the one at 9,500 or whatever, but it's a $150 wide gap. Bitcoin can move $150 easily in a day. So I don't even count this as a gap, but it is. I mean, you technically didn't touch that, but you got all this stuff over here that had already traded above that gap. See all this stuff? So technically, one could argue that this gap is filled, right? Just because of all that trading right there. The only gaps that you should worry about are the ones that literally haven't been traded through. Once they get made. So the market obviously said that gap was full. This gap right here was our first bear market target when we got bearish up here. This was our first bear market target, 26K, because that gap was unfilled and never been traded through. There is no, if you can look as left as you want on this chart, Bitcoin had never traded above $25,000. So there's literally no order flow in there. There is on the spot market, but not in the CME market. And it ultimately came back down and filled that gap. Now, gaps don't have to fill. I can find charts on the SPY, on Microsoft, on Apple, on Amazon that will never be filled because they're like all the way down at the bottom of the chart. And these things have already climbed thousands and thousands of percent away from the gaps. But your near-term, closer gaps, like that one, this one, they typically get filled. Like that gap right there is the reason why there was so much chop right here, because so many people were shorting based on the fact that that gap got filled. They got stopped out, then price dropped back down and ultimately just rolled over, but still, boom. So that's not very bearish. This is bearish, right? You stop being bearish right there. You made a higher high, higher low, higher high, higher low, higher high, higher low still. So although you could be right, it could roll over, it's not a distribution formation. Price does not go $10,000, $15,000, or well, $10,000 to do a distribution. That's a lot of people buying. All of this, so many people were buying for so very long that ultimately supply outweighed demand, or demand outweighed supply, and it just straight up to the gap fill. That's why I took profits. You probably got a lot of people that took profits on that move. From $16,000 all the way up to 35, it's 100% move. That's called a doubling of the account. That's why I took profits. But I still hold 2/3 of my Bitcoin, so we'll see what happens. But I am looking to hedge it for sure. So if you do get short, just make sure you're getting short with a small amount of money, with a lot of leverage, but put your stop loss below your entry, so that way you do not lose money on the stop runs, right? Even the fees, make sure you account for the fees to get in and out. But I mean, this thing does not look like it wants to roll over to me. It looks like it's ready to go, actually. And like I said, a measured move from that. The next monthly swing high to liquidate, in other words, is all the way up there. So that's the next major area for liquidations to occur. Now, are there weekly levels in there to liquidate? Yeah. There's nothing on a 2-week to liquidate. Nope. There isn't even any weekly liquidations. That is it. Once you fill the gap, if you can get bullish momentum, next liquidation point's $40,100. But that's on the CMEs. On the regular spot price, it's 40.30 or something like that. Pretty sure it's 40.30. Yeah, 40.38. So, yeah, that's the next area for liquidations to happen. Anybody that got short on Bitcoin right in there, you know their stop is setting above that candle. For whoever didn't trail their stops down anyways. Like anybody that got short up there and trailed their stops to that wick, they're done. But if they're trailing monthly candles, they got done right there. But there's still people holding shorts from up there that think Bitcoin is going to zero probably. So there's still liquidations that can occur up in these prices. You can better believe there's people holding shorts from up there. I'm not anymore, but I was one of the people that was holding a short from up there. Technical analysis can be as easy or as difficult as you want to make it. And I can promise you one thing, simpler is better. It just is. It works better. It has a higher hit rate. If you're looking to get long, you buy support. Support is bearish closes. If you want to get short, you short at resistance. Resistance is bullish closes. Dailies, weeklies, monthlies, quarterlies, yearlies. That's it. That's the whole strategy. Sure, there's supply and demand levels in there as well, but it's basically the same thing. Support or resistance. So the Amazon trade is just up $12. Boeing's up $12. We're still down $21 on GDX, but Schwab is coming back in line. You go look at Schwabby. Oh, Mr. Schwabster. Who bought Thinkorswim, TD Ameritrade. He bought the whole damn shebang. Yeah. I was going to close the position if we close the daily above 5104. Because this was a big candle, but so was this one. And look what happened. And this thing is clearly bearish. But it has got bullish div up. Bullish divergence all over it. But that's good. That means the indicator is resetting itself for another wave lower. Potentially. Or it could be looking to go back to over bought again. Who knows, right? Who knows such things? I don't. I just trade the ranges. And I make money doing it. There you go. Not much today. But yesterday was a bad day. Yesterday the P&L was down almost $220 based on those positions. And it's still not making me in the red. Obviously, I'm still well into the green, but taking a $220 loss on a day isn't good. But I had 3 positions open and all 3 positions went against me. They were all for me on Friday and all of them failed Monday miserably. miserably, but we'll get it back. You take 2 steps forward, 1 step back. 2 steps forward, 1 step back. We'll see if Schwab can take out this low down here. If it can, I'll take profits. I'll close the position down. But if we start closing dailies back above 5104, I'll jump out of it. But all of these trades right here, I'm still waiting to set up. Like Oracle, I'm looking for shorts anywhere in this area. XLY, I'm looking for shorts anywhere in this area. Anything above 160.95 will invalidate the short side. Lulu, I was looking for longs, but was unable to get filled. I sat in this trade almost a half a day yesterday, trying to get filled, and I did not get filled. The Lulu, not a very liquid. Well, it doesn't have very liquid options anyways. United Healthcare was a long. I just missed it. I missed it. I should have bought it on the open yesterday, but I didn't. And there she goes. So had I filled that trade, that wouldn't be getting shut down. This was a long. All of this stuff was talked about on Saturday. But the one that I did get filled in, GDX, little bastard, it's the one that isn't working. That kind of stuff is what makes new traders pull their hair out. I'm used to it, though. I've been doing it a long time. I'm good. I know in the future, this account will be worth way more than it is today. And it's real money. So, like I said in that video, anytime anybody wants to test me, all you got to do is say, show me your trade history, and I will show it to you. This is just today. So there's a lot of it. Lots and lots of it. But only one ACH deposit. And we're getting there. Right there she is. July the 12th. ACH deposit. $5,000. So no more ACH deposits. Just the one. So we'll keep it growing. We'll keep it going. We'll keep it growing. Like for F's sake, Heath deserves a big time. I appreciate that, Matthias. Appreciate you. Can we have a look on Bitcoin on the monthly? Nice pullback to 33-ish start the month. Might be an ad. I don't know if I want to add up here. But we did just look at Bitcoin on the monthly, basically to show that monthly support. I mean, if it gets above it and like can't close back under it, then maybe. But there's just too much uncertainty and negativity out in the world today for me to think that Bitcoin's going to go on and make fresh all-time highs before the halving. I'm seeing a lot of people jump on that boat, on that bandwagon on Twitter. New all-time highs before the end of the year. All-time highs before the halving. That's never happened literally in Bitcoin's history. Why would it happen now? Like, why? Right? I mean, give me some kind of data that says that, because the data that I see, it has never ever happened before. Bitcoin only ever makes fresh all-time highs once the halving happens. And last time that happened, we were at zero interest rates and zero inflation, and the Fed was cutting stimmy checks. So this halving is different. It will be different, because the Fed says higher for longer. So they might not start cutting until July. As of right now, that's where the marketplace has got it. They'll start cutting rates around July. Well, then maybe Bitcoin starts to moon in July. Who knows? But like I said, usually when Fed starts cutting rates, it's because something bad's happening, not because something good, right? They're not wanting to just say, hey, let's make everybody rich again. Cut interest rates. Boys, that's not how it works. The Fed cuts the interest rates once the inflation gets back down to where they want it, or once they break something in the economy. And typically there's a pretty big sell-off before the Fed gets the interest rates back down to zero again, and then opens up a new, not quantitative easing. Agreed. I see DXY having much more upside in 2024. Yeah. Litecoin. Yeah, that's what I was looking for. XLM. Yeah, Litecoin was not nearly as weak. Yep. Stellar did the same thing. Did it not made fresh all-time highs. So whenever you got altcoins that are inherently weaker than others, I don't know if I would invest in them. I mean, they have potential to obviously to make runs above there, but like I said, this is zero interest rate environments. This wasn't. So, I mean, even in a zero interest rate environment, this thing couldn't make fresh all-time highs. I'm trading based on the weather. That's a good idea. Moon cycles. I think I have the indicator in here somewhere. Moon phases. Can't do it on the monthly. Oh, yeah, baby. See? Full moon. Should have bought it. This is the funniest indicator in the world. But to be fair, I mean, it damn sure looks like it has a decent hit rate. Not here, you didn't. You'd have bought it there, you definitely lost. You bought it there, you definitely lost. You bought it there, you definitely lost. And then, boom. Maybe only buy fresh moon cycles when it's making a higher low. Maybe implement that into your moon phase strategy. I don't know. Implement other things as well. Like, where's your moving averages? You're above them? That's pretty good. It doesn't always mean it's good. Right there, it wasn't good. Moving averages are for trending environments. We haven't quite got one of those just yet. Where's that crypto stuff thing? That one indicator. This bad boy here. Breached. I don't even know if, I mean, this isn't even a tradable asset. But it is inverse to Bitcoin. It is inverse to Bitcoin. So 7.44% is where it needs to get. Would you stop doing that? All right. So all of the longs that I got in didn't work. all the shorts I was in yesterday didn't work. And then NASDAQ went off and probably made fresh daily highs. No, it didn't. It's choppy. Choppy. It'll probably be choppy. As long as my internet's working decently, we'll go live during the Fed meeting tomorrow. If I don't go live during the Fed meeting, it's because it isn't working that great. But today it was working perfectly. But those are pretty big rips. What's the average true range on it? Average true range right now on a 2-minute candle is 20 points. Holy shit. That thing is moving. This was the cash open. No, this was 9:30. So you tested the daily opening range, or at least the cash open, because these things open at the day previous. But you are back in the positive ticks on NASDAQ. So maybe buy some lows. I don't see anything. Maybe 14,377. That's where the VWAP comes in. That'd be roughly right in this region here. But don't buy it on the first test, because usually it'll go right through VWAP pretty far and then come back out of it. If VWAP is going to hold anyways. But I mean, it's staying pretty much right in the middle of the range. Love range bound days, I tell you. Makes day trading so much fun. Bitcoin's still not doing anything, literally. 0.49%. You can't even move a percent down or up. $33.9. I mean, if you want to buy daily support, you're buying it right into resistance. So just be willing to take profits at 34,548. If that's the range you want to trade. And then hold a piece just in case you get a breakout. But we don't trade for breakouts to happen. We trade for the range. We make our money inside the range. And then if it breaks out, then we just make more money. Yeah, all this stuff is back in the negative. Nvidia, I don't think ever made it to the positive, because it was 4.5% down on the day. But it did have a nice move to the upside there. 392 to 399. So that's a pretty good move there, $7. Want to see, we're at 400 on the NASDAQ. That's a round number. And it did close above. Push. $450. We'll give him one more shot, and then I'll be done with it, because it's just going to be an inside day, choppy inside, range-bound garbage day. A VWAP still sitting right about 79, 379. We'll let it sit through a little bit of heat, but not much. And obviously, if it closes under the 400, then we drop it. Push up. Go ahead, you liquidated that wick low. Go on up. Up. Up, you stupid thing. I've tried that before. It doesn't work. Closed under it. But let's see what he does right here. We're back above him. Come on, push. Push. I know you want to. Push, baby, push. Come on, take out the high. Take out the high of the previous candle, please. There you go. Keep on going, baby. Keep on going, baby. Yeah, get up there. Go for it. $4.12 is resistance right there. But if we could get a nice push through that, get up to $60, close them down, have a winner on the day. But if it keeps struggling like this, I'm bouncing. Go on, you just pushed above it. Keep going. This is scary. The cash open is setting roughly at 420. So let's do 420, baby. Let's set a limit to sell at 420. $420, not $420, $50. We'll sell one of them. Send. Boom. Now let's set a stop loss. 14,403. Review. Send. Oh, there's $60. We should just close it. We'll close them up there. Unless it wants to run. If it wants to run, we can hold it. 70. Come on, go, baby, go, go, go. The NASDAQ moves fast. So if you trade it, you seen just right there how quick it is just to get to like up or down between $100. It doesn't take much on the NASDAQ, even with a small account. We're up above where we typically would take profits. So let's just let them stop us out. There we go. Boom. 67.50. We'll take it. Day's done with that. So now all we need to happen is this stuff to work. GDX getting crushed. Schwab back down to $5 in the red. Amazon looking bad. BA's looking okay. But what happened to Schwab and GDX? Why you guys don't like me? I thought you guys liked me. When I put the position on, you said you liked me. Yeah, it doesn't like me. If we get up back above 5104, I'll close it down. And then GDX right here. Yeah, it's still pushing down. That must mean gold is rocking and rolling. I know the dollar shouldn't be rocking and rolling, not with the NASDAQ pushing up. The dollar is rocking and rolling. But it's at resistance. Resistance! Euro USD is not at support. But damn, what a short trade that would have been. That would have been a day's done in Forex. Man, oh man. See how easy that is? Like, their daily support, resistance, just sell it. Like, it puked right after it hit it. Right after it hit it. And I do this day in and day out. Look at that. See ya. Oh, yeah. So beautiful. Didn't even close the hourly above it. Oh, I missed it. I wanted it. I thought it was going to go higher. I thought for sure it was going to push up into the yearly open, but maybe it's making a lower high. Either way, I do expect it to roll over, break out of this pattern, and go down to parity. Let me see here. A lot of message retracteds. I like your channel and way of explaining things. Cheers, dude. Hey, it's my pleasure. Make sure you hit the subscribe button, bro. Be Fran. Because I trade live funds. I forgot to pull up my crypto account. But Bitcoin isn't in an area where I would trade it. So really no point, right? But I also got a Bitcoin account that I trade on weeks. There's a description and a link. If you're from the US and you can't find an exchange, use the weeks. It's an exchange that has no KYC. Just needs email and a password and you can trade. But there's just no trade set up here. There would have been one right there. 34,547. I would have taken that one. And I would have taken profits at 34,164 because that's support. So basically, I would have taken entry based off of this candle here because it's the highest bullish hourly close. That would have been my short entry. And this would have been my profit target. But that's only a 50% range. Like 0.5%, not a 50%. Oh, no, that was a 1% range. That was definitely a trade. That was definitely a trade. A 1% move on Bitcoin 20x. That's a nice trade. Should have been paying attention to it. But that was at 7 o'clock. So I didn't go live till 9 anyways. at 9, it would have been taking profit time. Yep. It's just range bound right now. Trading inside of the daily range. Trading inside of this range right there. It's good stuff, and it's easy, and it's in and out usually. In and out. All right. New to this channel? Yeah, I appreciate it. Hey, did you look at XRP? Yeah, I did. I sure did. It's up on the day, but I wouldn't be buying it up here because you already had a pretty explosive move in the last week or so. You're up 30, like from the low to the high, you're up 30%. Next area to watch for potential support would be right there, in my opinion. But I mean, like, if that's only if it's going to get bullish continuation, you're overbought, so you definitely don't want to buy it. Now, I don't ever go short when something's overbought because it can stay overbought for a long, long time. But I like to buy on down days, not up days. I sell on up days. Like I either take profits on up days or just flat out take short entries on up days. Like, oh, so close. So close to a short entry would have been there for me. Last bullish up close candle and then you puked. That's called supply. They don't always work though. But that was a good one. But it didn't quite get there, so it means support held. This would be your support because that's your lowest bearish close. And then this day he tested it. This day tested it. That day tested it. And it held until it broke. So you're just retesting support. You don't want to buy a retest of what is support because old support can turn into resistance. So like this is your last resistance level. You know that because this candle closed under it, this candle closed under it, this candle closed under it, this candle tested it and closed under it. It wasn't until this day that you broke out. So this would be the last point of breakout. This would be where I would look for price to trade back to. Test it and then go. If it's going to. If it goes here, it does this and does that, then it's not going to. It's coming down here. Support. These are the only two areas I could buy XRP. We never chase price on this channel. We have specific levels we watch, right? We don't chase price. If we miss the trade, we wait or find another trade. We trade FX, we trade crypto, we trade futures, we trade options, we trade everything. There's always an opportunity in the market, almost every day. Probably not today, because we got a Fed meeting tomorrow. Usually the day before a Fed meeting is like slow and choppy. You get small intraday ranges like this, very small. I mean, the US 100 is neutral on the day, like literally 0.03%. NDX is down a little bit. In Q1, this is lagged. This is lagged by 15 minutes. S&P 500, 0.15%. That's what I mean. It's choppy. Like, it's hard to make money in a choppy environment. Retail just get in, get out, get in, get out, get in, get out. But when I'm trading like NASDAQ and S&P 500, I use different levels. Like I use intraday levels. like a 400, the roundy, that's a 400 level. Those are levels typically people will be buyers or sellers at. And it worked. 400 held and it pushed up into what? 226? I mean, 426. 426, so it's a 26 handle move. That ain't bad. A 50 handle move would be better, but we try to get like on the ES futures, I try to get like 10 handles in a daily, or like you can get, if you get in a position you get and it moves in your direction 5 handles, you take the trade off. 5 handles just means $5. So like if I bought it at 41.94, I'd take profits at 49.99. And then I would look for another spot to get in and then take profits, try to get 10 handles in a day. And on the NASDAQ, you should be able to get 50 handles in a day because the NASDAQ moves much faster than the S&P 500. But the NASDAQ is more dangerous for new traders because it moves so much. The NASDAQ can move 5 handles in one tick. And the way it works is you get charged. It's like price every tick is like on the micros, which that's what I was trading. It's the micro. It's not the ES minis. It's the micro NASDAQs, not the E-mini. It's a micro E-mini. See that? It's smaller, much smaller. So like each tick on the NASDAQ is like $1.50, I think. I'm not quite sure. I haven't done the math. But each tick, there's 3 ticks between, or 4 ticks in $1. Because the way this works is you go from whole number to 0.25, 0.5, 0.75, then whole number. That's a tick. But when you get a candle like this, 14,362 spot 00, like it moved up there quick. You see that? That's 62. That's 93. So how many handles is that? That's 31 handles. So I probably did get 50 handles. No, where it was. I bought the 400. I bought right here. So I bought there, 94, and got out on this wick, 31. So I got around 30 handles. I'm okay with that. And 30 handles ended up being like $61. But you can see that it did that in 6 minutes. These are 2-minute candles. So even with a small account, like you can lose a couple $100 quick. Like if you'd have sold that wick right there and then not exited until there, your account would be down probably $350. You got to be careful if you want to trade. My advice is if you want to trade futures on Tasty, like I'm doing right now, do it on the micros. So that way you can manage your risk a little bit more effectively. But technically, I could handle a $60 drawdown because the account started with $5,000. It's got $1,300 in it, which means, the account is $6,300 right now. So technically, 1% of risk would be $63. So around $63 is the heat I could take on a trade. I wouldn't ever, not intentionally, but sometimes you get like these things. And today's sideways and slow. Let's go look at yesterday. Look at this. So if you would have bought that red candle right there, I don't know why you would have, 341. I'm just saying if you did, that's 341. Within 8 minutes, you went from 341 to 427. That's almost 100 handles. So if it's like $5 to $6 a handle. I think. Not exactly sure. I'll figure it out. I'll figure out exactly what it is. I'm sure there's a website somewhere. Maybe even Tasty tells me. I don't know. I'll look it up and I'll tell you guys what it is. But you don't have to have a lot of money to make a lot of money. It just depends on what you're looking for. I mean, you don't. If you work in America and you don't have a college degree, like if you're just doing some kind of regular job, like I don't know, carpentry work or plumbing or something like that, you probably don't make up but $100 or $150 a day in a whole day's work on a 10-hour day, right? The average salary in America is like 30 grand a year. That's like $150 a day on straight time. So I mean, you could easily make or lose $150 a day trading with a $2,000 account easily if you just trade the NASDAQ. And like I said, some days you're going to get lucky and you're going to get in an entry and then you're going to be in something like this. Right? You sell a top tick. Why? I don't know. Maybe that was the top edge of the expected move for that day. And then you short it at 402. Plus, it's a big figure, 400. It's a round number. So people sold the 400. Low was 212. That's a 200-point move in one day. 200 handles in a day. That overshot the expected daily range. The expected daily range on NASDAQ is usually around like 150 to 170 on an average day. So you do 200 in a day, damn. And if you can catch them all, damn. You won't catch them all, but you can catch enough of them. But like basically I get where the dailies levels are and then I go from there. Like I did at the beginning of the stream. I can't remember what I used. What did I use? I used NQ right there. So remember I said I wanted to be a buyer around this level right here because that's the lower edge of the daily expected range. And we go back over to today and that's where it got. It didn't get completely there. And remember, I adjusted it for the $12, or it was $112. But when I looked at it this morning, it was $117. So that means the VIX must be moving lower. If the VIX is moving lower, then the implied volatility goes lower. Then therefore your expected range will go lower. I should have looked at the VIX. Use the lower number. But that's where I wanted to be a buyer. Had I been able to get long in that instead of running my mouth for the live stream, I'd probably still be sitting in this trade because I would have took one contract off on the move up. Take one contract off, move my stop to break even or better, and just let it ride. Whatever happens, happens. Sitting in the trade. But when I'm on a live stream, it's a little bit more difficult to control risk and stuff like that. Me buying way up here is stupid. Like even though it is a round figure, you can see that it didn't hold here, right? There was no guarantee that it would have held here, but I like this bullish explosive move back up above the round number, so I figured it would retest the round number and go. And it just did again right there. 14,400. That's a round number. So you could have grabbed 15 ticks or 15 points out of that move right there. It just looks like a small move, but it's not. It's a pretty decent move. If you can get anywhere from 30 to 50 handles on the NQ, you're done for the day. Obviously, when you have more money, you can take more contract size. review. The account does not have sufficient buying power for this order, so the most I could take was 2, I'm sorry. But if I wouldn't have jumped in those trades, this is what it's looking at right here. It's looking at my option buying power. I jumped in that Amazon trade and it took my buying power down. But earlier today, I took a couple trades with 3 contracts, both short and long. So, yeah, I mean, the more buying power you have, obviously, the bigger size you can take. But remember, each contract you take, you're leveraging up that position by a whole whatever. So just keep that in mind. Check the distribution schematic 1 and compare the daily. Distribution schematic 1. I'm almost 100% positive it's going to be I don't see distribution schematic 1. Like, I see all this garbage. I don't know where you're getting that from. But this is probably a period of weeks. We don't even know, like, was this taken from a daily time frame, a weekly time frame, a monthly time frame? We don't know. Right? I doubt it was an hourly time frame. Usually these kind of things take time to happen. Like, a Bitcoin has a perfect one. Down here was a beautiful accumulation formation, and this wick low right there was your springboard up. And look how much time that took. Took a ton of time. And then if you look over here, back when it made fresh all-time highs the first time, you had a perfect accumulation formation. Right? A 3-drive topping formation. This is your springboard. This is when you short it. Boom, boom, boom. Like, you can overlay most of those. Like this one, for instance, you can overlay that almost perfectly to this chart. But it took days and days to do it. We're only where we are, and we've only been here for 5 or 6 days. Well, 1, 2, 3, 4, 5, 6, 7, 8, 9 days now. So for an actual distribution formation to occur, I would expect that to take a couple months. I don't know. Maybe Wyckoff formations do form intraday. I don't use it. Like I said, the way that I trade is easy, and it usually, I'm able to pull winners out consistently. With options, it's a little bit different because I'm taking those trades based on time. Not so much. I use technical analysis to get into the position, but I'm not necessarily expecting that position to work out in my favor instantly. However, I took that trade live today when we did what? When we tagged monthly supply. That's when I took the entry on Amazon. Right there. Even though it was with options, it's a spread, so it's not going to move nearly as quick. But I only paid $1.61 for it. See, I even paid 10 cents more than I typically would. Max profit on this trade is $265. Max loss is $160. It's just a way to take the trade on the bigger thing, on the bigger assets that move much quicker. If I would have just bought this one put, I'd be up, what, $60? Well, from 35 to 75, that's what it would be. But I would try to get in on the midpoint. So I would have tried to get in at 432, and I'd be able to sell it for 480. So that'd be close to a $50 move already. But I did the spread. So I need this thing to move up a couple more strikes before it'll really start to pay. And once I get to 50% of that number right there, that's when I take profits anyway. I don't try to expect to get the whole amount, because if you look at this on a curve, a distribution curve, and you analyze the trade, like it's a put trade, this yellow line is your profit expectation. So you look at P&L Theo on the bottom, that's theoretical P&L. So once price gets to this number right here, which is 132.29, I start making money, but it's very little. I don't start really making money until we get into about 131.71. Don't look at it, because that's max profit. That never happens. This yellow line right there, that's your theoretical. So you would have to get all the way down to 105 to make almost 100% on that trade. But I don't. I usually take it off at one standard deviation, which is this white dotted line that goes across. That's one standard deviation from the amount of the expiration, 24 days to expiration. So roughly right in there, 50% or one standard deviation. So if we get down to 122.50, I'll take the trade off for 50% profit. Right now, Amazon's trading at 132. So that's $10 move at least that I need to happen on Amazon. But what it does by taking spreads is it makes it easier to manage your risk. So you see, I'm not up $50 or down $50 just because this thing moved up or down $1, right? It's easier to manage risks. It takes longer to make the profit, but it also takes longer for you to lose your money. So like right here, this is getting GDX. If this thing doesn't start going my way, and I mean soon, I won't eat a full loss on this trade. I'm not going to let it get to $60 before I close it. I only do that as if it happens and I don't pay attention. But I'm usually paying attention because I'm sitting in front of a computer screen all day, every day. So if we lose this level right here, I will close that trade. If it closes just one hourly candle under it, I'm out. I will bounce. Obviously, it doesn't matter what gold's doing. This thing trades on its own merit. Or gold is probably going down. Yeah, gold is going down. So, yeah. But gold is structured bullish. That's the whole reason for taking the trade. GDX had a pretty big pullback. Gold hasn't had that yet. So maybe in hindsight, I shouldn't have taken it. But this is the level I was looking to get long. I just missed it. So on this day, I figured it would retest this level, demand, and then go up. Well, it did a little bit this morning, and then it fell right back down. So right there. On this candle here, I probably should have exited the trade. I mean, you get a nice little move above the level you're watching in and you dump. That's a pretty good signal that it probably ain't going to work or go your way. But like I said, I could let this trade play out for days and days and days. but I just won't, because this is the level that invalidates my short. Once that happens, I'm done. How about a Verizon short now? No, I wouldn't take it, man. It's breaking out. No, and it's getting bullish continuation. Hell no. This was the breakout. You broke out, you closed above resistance. Right there. That tells you that this is no longer a valid short. The fact that this candle tagged resistance and then rolled over, then the next day gapped all the way up to there and traded straight up and closed above, invalidates this move. This is what is called a bear trap, because it took out support. This is support. So technically, this thing should have gapped down or came back up, tested that level, and then rolled over and went for the gap fill. It didn't. This is a bear trap. So if we take it now, no, this thing could trade up. It's going through bullish continuation right now. We want to short stuff that's got bearish continuation, not bullish continuation. Verizon's a good company too, so I mean, it's been in a downtrend for a long time. I should have shorted it up there, but I guess shorting it down here, people found that it was just too valuable down there. So obviously they bought it, and then they bought it up on earnings on a beat. Not a really good beat on the bottom end, but on the top end line or top line beat was a good beat. They bought the hell out of it, and you're getting bullish continuation. The only way I can short Verizon now is if it makes a run above 35.14 and then drops back below 34.30. That's the only way I could look for a short on Verizon. Because what that would say is there's a potential that it was just making a run above this swing high for the liquidity, and now it's rolling back over. Then I could potentially short it. But as long as it's got bullish continuation like that, you stay away from it, because you're trying to buy or short. You're trying to stop a train, essentially. Like, I don't think it will today, because today's got, you got FOMC tomorrow, but this thing could lose way up there today. Easily. You still got a long day of trade ahead of you. It's just 11:30 in the morning. There is resistance there, though, Brian. If you want to take a shot at it, you are into resistance. But I don't want to take a shot at it, and I'll tell you why. Because I just closed it out for a loss yesterday. To jump back in it again, thinking that I'm right this time, would be madness. I'll just wait for price to show me, yeah, it was just running the liquidity. Now it's back under a resistance. 34.30, any retest of that, I'll short it, and then we'll catch it. Because like I said, it's got a big gap to fill. It could drop all the way to 31.40 if it does indeed reject up there. But I'm not going to take it while it's forming bullish pressure right there at resistance. People are buying this. They're buying the highs. They could blast off any minute now. See how these got mostly blue in them? That's 70,000 shares. 7,000 shares purchased. Right there. There's obviously more buying than selling going on. There's 531,000 bid versus 451,000 ask. This stock is probably going to break out. I mean, it doesn't mean it has to, because I don't know what price is going to do. Nobody does. But it just don't look right for a short. Not for me. XLM follows XRP. I want at least one more year of flat or down on what? Bitcoin or XLM or XRP? Yep, internet going good today. Perfect. But yeah, no Verizon short today. I'm in all the positions I'm going to take today. Amazon short, BA long, GDX long, Schwab short. So I pretty much got all the sectors. I got tech sector, I got defense sector, I got gold, and I got the banking sector. I'm long the ones that technically should be going higher, but just are not. Right? That's because I'm wrong. You're going to be wrong. You just got to learn how to make your losers smaller than your winners, right? If you lose $30 on a trade and you make $70, well, guess what? Ultimately, you're going to be profitable. It's just about managing risk, not stepping in front of falling knives or runaway locomotives. That's just the way I've always traded, profitably. Whenever I try to pick bottoms and tops, it usually doesn't go well. I understand that the Amazon trade is literally trying to pick a top. I understand that. I don't expect it to work. But yeah, I literally picked the top. But the top that I picked is a monthly support level. And according to the monthly chart, if Amazon is going to continue down, because it should, because it took out last month's low, I'm assuming this is just a pullback to monthly support or monthly supply. And if it continues, I'll be wrong. You got today left to close this monthly candle. Today's the 31st. Tomorrow is a new monthly candle. So if it closes like above this today, then I would expect it to trade up to monthly res eventually over time. And this is what it looks like on a daily. So if today finds support at this candle's midpoint, which is a possibility, and then closes higher on the day, I would expect eventually 138 test. And I would not be looking to short that there either. Unless it struggles for like 7 or 8 days. But not on the first test. This was the second test. First test was here. You could see how it, like, price played around with it here. Boom. Tested it and exploded to the upside. And then that's when sellers kicked in. You got right here and then gapped down below it. Sideways down. That's a test of quarterly res. There's a retest of that support that you gapped down from. So this could be looking to fill that gap. It could be looking to run all the way up to 135.18. Just because it's barely down right now does not mean go up for the rest of the day. Look what it did yesterday, just straight up. It was in good shape on Friday. When it closed down in here, the trade was in good shape. But then on Monday, it opened like pretty much where I got short and blasted off. So yeah, I wouldn't doubt it if it just trades down to the pre-market lows and then rolls right back over and goes up. All right, we're going to wrap it up with that, guys. You all have a fantastic day. As long as everything goes as smooth as it did today, tomorrow we will stream during the Fed speech, and we will look for short or long entries depending on what the market gives us. But if they're not going to do anything, I'm expecting the markets to be a little bullish for a little while because they've just been bearish for so long. And like this chart I shared on Twitter, I mean, it looks like this thing is just trading in between the CPIs while the Fed is not doing anything. So, like, I could potentially see a retest all the way back up to there. Because this is what happened when we had this CPI, August's. It made the move lower, retested July's CPI to perfection. Look at that. It closed right on it, took out the high of day, and then dumped. Traded down to May's CPI, bounced, came back in for a retest, traded all the way back up, took out August CPI highs. That was a liquidation move right there. Then it ran down. Then we had September CPI here, 1 day up. Next day, take out the fresh day high of day, down, 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 down. This was the next CPI. Down, retest, down. May CPI. That this could be support. I could be completely and totally crazy also, but it just looks like it's trading the CPIs in between them to me. So I could expect a pullback all the way to 42.52, which is this resistance level right there, and even higher. I wouldn't be surprised, especially if the Fed pauses, which there's a 98% chance they're going to. So unless the dollar gets some real strength going here and like literally breaks out of this formation, which is a clear and obvious bull flag. If it breaks out here and gets bullish continuation, then I would expect this S&Ps to roll back over. So we'll just have to see what happens in the next few days. With that, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.